Good evening. This is Jack charting the markets, and this is the Bigger Picture webinar for Wednesday, the 11th of June. My disclaimer: I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay. Yes, we had an open week 6-minute sell signal. I was actually wondering if this might fail this morning, but it did actually turn, and that's now made the possible near miss target. We had another one as well on RTY, and that made the full target. So we've seen a bit of retracement today. We did have bearish stats today. They didn't deliver yesterday, but they did eventually deliver today. What does that mean in terms of the next 3 days? Well, the next 3 days all lean bullish. Next week is a holiday week, so we're leaning bullish through Monday. Then we basically got neutral stats on Tuesday, Wednesday, and Friday, with Thursday being the holiday. So we will see. But yeah, we're leaning 52% bullish on Tuesday, 52% bullish on Wednesday, and 52% bullish on Friday. So very, very weak bullish stats. But and also bracketing the holiday on the Wednesday and the Friday, we're probably going to have a fairly low volume period. So we'll see how it goes. I'm thinking this is a bullish window. I did a post today looking at my scenarios for seeing upside here and what I would ideally like to see, which would be actually significantly more than new all-time highs on SPX and NDX, particularly if we are to see IWM make a new all-time high too. That might be too ambitious. I don't know how far up this can go, but we will see. All right, looking at ES, we've gone higher. This no longer looks as much like a double top. We will see. And Q has gone higher as well. RTY has gone higher before obviously coming back. This really doesn't look like a double top anymore. But obviously RTY is the one that's broken up from a bigger picture IHS, with this being the right shoulder. So at the moment, we're just pulling back a bit to back test. On YM, no current divergence. DAX, we had a 60-minute buy signal fixed, and that didn't really do a great deal today, although it's come down a little in the aftermarket, and ESTX as well. All right, let's have a look at the bigger picture charts. Okay, looking at the daily chart, we lost the divergence on the RSI 5, so we've no longer got an RSI 5, possible RSI 5 daily sell signal brewing, and we're finding a bit of resistance at the daily upper band. So I'm thinking a bit of bullish consolidation. I'm not seeing much indication, although I have got some, thinking, suggesting that we might see some more retracement. I do have a little there, but it's thin. Looking at the hourly chart, no divergence on the hourly chart here. We've broken the support trend line here, and that brings us to the other thing I think we might do if we get a weak morning tomorrow morning. I'm thinking, I've been mentioning that it would be a good thing from the point of view of drawing patterns, if NDX was to get down to this trend line here, i.e. rising support from the lows in April. I'm just wondering if we might possibly make that on a weak morning this morning, tomorrow morning. I mean, we're seeing some weakness overnight. I would like to see that made, and I'd like to see the corresponding position on Dia made too. I don't know, that might be too ambitious, but they would be really nice if we could get those, because at the moment it's very difficult to work out what the patterns might be on Qs and Dia here without reaching this level. Having said that, it may well be it'll become clear what's happening as we go up and I get more data points. But obviously that's a data point I'm usually looking for, and I'm a bit surprised we haven't yet reached it. All right, looking at the Qs on the daily charts, we lost the negative divergence on the RSI 5 there too. On Dia, we didn't have any negative divergence, but we've got an RSI 5 sell signal, and I'm calling that, hang on, I've got that once it gets the possible near miss target and it then makes it to the back to the 70 level on the RSI, I call it. So that is now no current divergence. So we haven't got any daily sell signals outstanding. There's no reason to turn here, and we don't have the patterns developed, certainly even on SPX and IWM, to a stage where I'd really be looking for a turn here. Although there are some indications, and I'll get to those. Dia, hourly chart, nothing happening. 15-minute chart, nothing happening. But IWM actually is of some interest. Looking at the daily chart, hang on one second. For some reason that didn't stick. Okay, all right, looking at the daily chart, I've got this rising channel here, which I'm watching. But if we and this obviously is an IHS which has broken up. So this is the very bullish scenario for the markets over the next few weeks, where if we went back and retested the all-time high on RTY, which is still a long way below it, then that might actually get the other indices I was looking at to the higher targets that I was talking about in the post. So have a read of that. On the hourly chart, I did note today that we got an RSI 14 sell signal fixed, and we had an RSI 5 sell signal fixed on the hourly chart, and that's already made target, but the RSI 14 sell signal has not yet made target. So I'm thinking we may see some follow through, and it's alone, and I'm not reading too much into it, but you can see here, we've got this channel here, which I've drawn in. You see this trend line here? It's really not bad. I'm watching this with great interest, and we will see, but it could be we're going to see a bit of a breakdown here. We haven't got any bullish stats for tomorrow, but the historical stats are really a pretty decent guide, but they're only a guide. We will see. We could see some retracement tomorrow, a bit more, and that actually might get me my trend lines on Dire and Qs, which certainly I would be happy about. All right, DAX. We've actually got a weak RSI 14 sell signal fixed here. We're still on an RSI 5 sell signal, but that's now reached the possible near miss target. We're holding the daily middle band, and as long as that's holding the daily middle band, then there's no particular reason to think that anything significant is happening to the downside. If we lose that, I will be taking that possibility a little more seriously. We've got a possible IHS like the IWM here, but it's too large, so I haven't drawn it in. But if IWM goes and makes that target, I am thinking Nikkei is probably going to retest this high here at 42.4K. Okay, let's have a look at currencies. Now, DX. DX, you can see in the aftermarket, we're dropping down. I'm wondering if we're going to go back and retest this low here. I don't know how much that is to be trusted, but if it is to be trusted, then this is going to head down. I think I might need to restart this, which I'm not going to do, but I'm wondering if we're going to see a retest this low, and then I'm wondering if we might go a bit lower and retest this low here. Looking at the hourly charts, we've got Euro, which is heading a bit higher. I'm thinking ideally we'd get to this trend line here. It might go beyond it, but the obvious trend line resistance is up here in the 115.8 area. GBP USD still pretty close to the highs. USD JPY dropping a bit after a breakup over this declining resistance trend line. Not sure how significant that is, but we will see how this develops. USD CAD, possible bottoming action, but nothing really particularly interesting. Possible topping action on Australian dollar, but really things have been trending sideways, and there's not an awful lot to see here. As usual, there's more to see on the daily chart. Okay, let's have a look at that. Okay, on the daily chart, we've still got an weak RSI 5 buy signal fixed. We came pretty close to failing that today, and it may fail, and it is fairly easy to fail a weak buy or sell signal. This really looks as though we're looking for a retest of this low here at 97.92, and that would be the obvious place to go for me. So I'm quite liking that. And we will see how that goes. Looking at the bigger picture charts on Euro, we are coming pretty close to a retest of this high. On the bigger picture, this is a big falling wedge that's broken up. So the main thing I'm really looking at here is the bull flag. The bear flag. And when there's a corresponding bull flag, obviously, on DX, which I'm watching with a very high level of interest. It seems not really what I would expect for this to go back and retest the lows and for DX to go back and retest the highs, but I've seen some astonishing retests in the past, so I really never rule them out. Looking at GBP, we've got a nice looking falling wedge that's breaking up there too, and again we got a bear flag. And I'm wondering if that might deliver. Testing resistance there, but obviously we might see a bit of an overthrow here on a rising wedge like this. And this again is a nice flag. Looking at the smaller picture, this is that there. We are overthrowing it very slightly. But this whole thing might, of course, be a bear flag. We've got a weak RSI 14 sell signal fix there. Okay, looking at USD/JPY, I've got this nice looking rising megaphone, and the next obvious target would be down. So I've got that down in the 115 area. That would require US dollar to break down from the bear flag. Sorry, from the bull flag. So watching that with interest. Would it be beyond the bounds possibility for this to go back and retest the high? Obviously not. So there is plenty of scope for upside here as well, as on the US dollar chart. Looking at the daily chart, not a lot to see. USD CAD. The main thing I'm watching here is the very nice looking potential double top. So this hasn't really done a great deal, might be starting to break down. Obviously that would be bearish for the dollar as well. Looking at Australian dollar, nice looking falling channel, and that hasn't broken up yet. Nothing really happening on the daily chart. NZUSD, we've been in this triangle for the last 5 years. So obviously these patterns can take a while to form and play out. At the moment, I think we're heading back to the obvious next target would be the resistance up and about the 0.618 area. And I've got that up here. So we'll see whether it makes it. But at the moment, not a lot is happening. We've got a weak RSI 5 sell signal fixed, and there's not a lot happening with that either. So we shall see. All right, let's move on to bonds. Okay, looking at ZB. ZB, this seemed to be on track to do a head and shoulders and head back to the lows, but we had some support and a break up yesterday morning. And while we might still be forming a head and shoulders, I'm considering other options. But this does look like a bear flag that's broken down. This looks like a head and shoulders, but I am wondering if we're going to head back to this high and potentially break up. And I was looking at the charts there. I haven't got an awful lot of support for that. But at this stage, I am wondering a bit. Looking at Zelen, again, we had a flag, it broke down. We had an IHS, it failed. Both of these indicate a retest of the lows soon, so we shall see. But I am wondering about the big beautiful bill. At the moment, it's beginning to look a bit doubtful, because certainly the polls are not looking good for the big beautiful bill at all. Mainly, the biggest fan of the big beautiful bill is President Trump. It doesn't look as though it's particularly popular with many other Americans, nor should it be, really, absolutely, objectively, for many reasons. So if it changes the math on the bond situation here, if it doesn't pass, if Trump is reluctantly forced to be fiscally prudent, then well, it can make things interesting. I mean, we're a long way away from seeing any conclusion here, but if the big beautiful bill fails, that could be a boost for bonds. All right, looking at the bigger picture charts on those. Okay, looking at TYX, which is the 30-year yield, I am wondering about this little possible head and shoulders forming here. I don't really have an equivalence on the other charts, though. But we've got, obviously, a potential double top here. This would be a relatively small move. I wouldn't be astonished to see it, but I'm not seeing a lot of support for it. Looking at TNX, we are fighting our way around the daily middle band and going through it at the moment. On the hourly chart, this looks like a bull flag that's broken up with a retest to the high. This could be coming back for a retest to the low, but that's a bit too large to be a double bottom at this stage. So I wouldn't be calling it that. We will see. Looking at TLT, again, we've got a bear flag that's broken down, and I'm wondering about a retest to the high. That could set up a valid double top if we see it. Not definitively going to happen, and we do have a potential head and shoulders forming here too, and we've got one of those potentially on TNX, although it's not as nice as the others. On TYX, possibly. We will see. I'm not actually running the 60-minute chart on this. I haven't created that yet. So we will see. I'm still quite liking the head and shoulders. I'm considering other potential options here. So we'll see. All right, CL. CL broke up today. Now, obviously, we've got unrest in the Middle East, and, troops are being moved around, and there is talk of the Iran deal failing, because I think at the moment the Iranians have just said they're not interested. So that, I think at the moment, one of the dangers is that I think President Trump's feeling rather shot at. Ironically, it's but I think I think he's thinking, he's picked up this name Taco. Trump always um, chickens out, and I think he might be looking for a way to try and appear strong. Now he's not going to do that on Putin, because obviously he doesn't ever does anything to Putin, but he could do something with Iran. And I am wondering whether that might make him more likely to take military action against Iran. And that actually can have a very big impact on the oil price. I've seen wars happening on oil a few times, and well, they had a big impact. It's a sort of, I think one of them, I think it shot up $40 in a day, or $30 or something. But I mean, I've seen some pretty wild moves. It went up a few bucks today, and it's gone beyond the trend line here. We are still looking at potential bear flags. I've got a pretty nice looking one on heating oil. We've gone very slightly beyond, but that could easily be a bearish overthrow. RBOB hasn't even made it back up to this resistance, although it looks like it might reach it tomorrow. But I am thinking that obviously if we've got war on the table here, then that does change the math. So these could still be bear flags, but if we get increasing tension in the Middle East, then then there will be a war premium on oil. There won't be a war premium on natural gas, which is continuing down and looks like it's coming back into a retest of these lows. If it gets back to these lows, which it's getting close to, then I'd be looking for a retest of this low here in the 3.3 area. We will see. Okay, let's have a look at the bigger picture on that. Right, oil, at this stage, I did mention that I've got this odd-looking channel here, which is, I've mainly been watching just because it's a perfect channel, and it's nice. I've been mentioning, while it looked very out of reach, that we might get back to the channel resistance, which I've got currently in the 77 area. Now, the big resistance on the way there is the 200 DMA, and we almost reached it today. I've got that at 68.83, and if that breaks up, then actually, potentially, we could be looking at a move up into that channel resistance in the 77 area. We will see. But the reason I've kept this channel on the charts is just because it is a high-quality channel. And if it's a high-quality channel, then it's generally worth keeping an eye on. This might be where we see this channel actually deliver and get us back up to trendline resistance, and wars do that. We're testing the 200 DMA at the moment. That's big resistance, and obviously we're watching the situation as it develops. But I think embassy staff are being pulled back, troops are being moved around. There is definitely talk of potential military action. We'll see. Looking at heating oil, we've got on the bigger picture, I've got this huge falling wedge, and we could be breaking up towards the resistance here, which I've got in about the 2.35 area. Looking at gas oil, we do have an overall pattern there. Not really, no. So we've got this rising megaphone, but it's not really a particularly satisfactory example of anything. But what this could be here is second low of a double bottom. I'm very skeptical about that, but we will see. All right, looking at natural gas, obviously I'm still expecting this. Having got down this far, I'm really thinking that this double bottom here is not going to make the target. We've been consolidating, and we've been forming a very, very messy head and shoulders. Looks rather better on the weekly chart as a potential than it actually looks on the daily. But I am thinking that we've possibly made the found a range high here in the 3.82 area and might head down. We will see. But I'm liking the downside if I can manage it. That retest of the 3 area would just be a first step on the way, in my view. Pretty good chance we'd actually start heading down into the 2s and then the 1s. We'll see, because I think there will likely be. I really don't think the economic outlook is looking good. World growth has been cut fairly brutally just on the trade wars, and the thing we need to remember in the US is everyone in the world is currently in trade war with the US. and the US is currently in a trade war with everyone. Now, for the rest of the world, the US is one, albeit often large, trading partner, but only Canada and Canada and Mexico are very highly exposed. For the US, they're a trade war with everybody. And there are boycotts of US goods. There is, so I was reading stories today about, people talking about being in Canada and seeing US products at half the price of the Canadian products next to them, but the Canadian products were selling and the US ones weren't. There's a lot of, I think the Canadians are particularly annoyed, but there are boycotts elsewhere as well. Because apart from anything else, the Europeans and most of the others haven't put on reciprocal tariffs. I mean, actual reciprocal tariffs rather than what Trump has called these. And the reason they haven't done that is because they don't want to tax their citizens, because it's their citizens who pay that tax. That's something which Trump has been denying that Americans are going to be doing, but of course Americans are going to be doing that. And that's one thing which is really going to restrict economic growth. It is a very large new tax, which is going to hit the middle income and lower income groups disproportionately heavily. In that sense, a very Trump tax, I guess. It's but the point is, of course, that's going to hit demand, and even aluminium. I think at the moment there's no real way of making much aluminium. So basically, what this is really doing is everything that the US is currently making using aluminium, they're going to be paying 50% more for their aluminium. Is that actually going to increase manufacturing in the US, or is it going to decrease it? I suspect it's going to decrease it. In fact, it's rather like the steel tariffs that Trump did in his first term, and I think some economists were looking at that, and they reckoned he saved 1,000 jobs in steel, manufacturing steel, and he cost 75,000 jobs in other areas of US manufacturing doing that. That's the danger with this kind of tax, and I think we might be looking at that. We will see how that goes, but I think demand for natural gas is going to go down. I don't think that's going to be much affected by Middle East instability, so I think that's following its natural path. We may well find that the petroleum products actually go on a different one now. We will see. All right, let's have a look at GC. GC, we got a flag, it's broken up, we've seen a retracement, and well, I hope its next stop is to head up into a retest of the all-time highs. We'll see how that goes. I do have a bit of negative divergence hanging around, but I don't really have anything on silver now. We had a 60-minute sell signal there, and we made the possible near miss target, and this looks like a little bull flag. On palladium, this looks like a bull flag or bull triangle forming. On platinum, keeps going higher. We've had two 60-minute sell signals fixed. This is a strong trend, and this is really broken out. I wouldn't be short this item at the moment. HG seems to be slowly heading back into this trendline support, which I've now got in about the 4.69, 4.7 area, slightly above the monthly pivot at 4.68. Let's have a look at the bigger picture chart on those two. Okay, gold. Gold, nice flag, broken up, back tested, the daily middle band and broken resistance, and the next obvious target would be a retest of the all-time high at 3,500. Looking at silver, silver we've seen a bit of a break up. We went over my trend line in the 36 area, but I did say my preferred trend line would be up here in about the 38.5 area now. That's where I would like to see this head next. And it would be nice to see silver doing something more interesting while gold actually goes higher. So this time, I think we've got a shot at that happening. No current negative divergence on the daily chart. I'm not seeing any reason this can't go higher. Looking at palladium, bigger picture, this isn't a great looking double bottom. It's more likely to be a bear flag, I think, but it wouldn't necessarily need to be. If it is a flag, however, that would still have a target, which would be up here in about the 1300, 1400 area, and that's actually not a bad match with this still open double bottom target, which is in about the 1380 to 1420 area. Okay, looking at platinum. Platinum, we had this, you can see we had this 2-year compression and off to the races. This also could be part of a bear flag, but this would be A, B, C. So while forming that bear flag, it got up into the 1500, 1550 area, and of course it doesn't need to be a bear flag. I'm just not seeing an obvious reversal pattern here. There's no obvious double bottom. There's no obvious inverted head and shoulders. So I'm just speculating. You don't always get these things, but you usually do. And I'm not really seeing an alternative read at the moment. Could this, what I'm basically saying is we could easily get up to the 1400, 1500, possibly even 1600 area, even if it is a bear flag. So we shall see. All right, looking at copper. Bigger picture, this may well be a double top. Smaller picture, I think the hourly chart's mainly what I'm looking at here, but I'm thinking we're going to top out and head lower again. So copper again isn't likely to fare that well. And we're going to start it takes a while for economic numbers to feed through. I've said it a few times, but it does. Inflation numbers the tariffs, we're going to start working their way into them now, and economic numbers will start coming through as well. Those aren't likely to be good. I mean, it may be, there's a lot of talk about, golden age and, swallow it, covered in money and everything will be great and manufacturing will come back to the US. But the fact is, manufacturing coming back to the US requires a stable regulatory environment that is predictable, which we don't have, and it requires years and an awful lot of money. Who's going to make a decision to do that and spend an awful lot of money and make a decision which is going to commit them over a decade or two in this kind of environment? Nobody. No one in their right mind. So they're going to wait. They're going to wait for more clarity. And while you wait, economies quite often go into recession just because people are feeling more cautious. They have every reason to feel very cautious here. And so I think chances are this is going to turn out to be a full recession. And I think it might be a deep one because at the moment, I think, frankly, all this stuff about tariffs, being a great way to raise money. And, the fact is, what Trump's gone is he's gone back to an idea which was, pretty fashionable in the century before last. But to be honest, it tended to be restrictive on growth. It wasn't particularly successful. And there's absolutely no way it could replace income tax. But Trump doesn't know that. So he doesn't have anyone in his vicinity who disagrees with him. He doesn't read. He's not going to really learn otherwise. He's going to have to learn really by trying it and failing it if he really believes in it, and he does appear to. We will see. All right. Look, I did say I've got some negative divergence on some precious metals, and it's mainly on GDX and GDXJ. They're not actually that far away. It's only on the hourly charts, but I am leaning towards seeing a bit more downside here, which may well feed through into the metals themselves. Okay, let's have a look at commodities. Okay, KC. I'm still leaning towards this being a double bottom or an inverted head and shoulders forming. We don't really have a strong indication of which one or the other it's going to be. We'll see. Looking at sugar. Sugar still looks like a falling megaphone. It's still not a very nice falling megaphone, but might be because it's not. Maybe it's just not a great trend line. If it went through that trend line there, it would be okay. But this could be a falling wedge. This could be a falling wedge, which is starting to break up, but it's not a very high quality pattern. And this could be a double bottom, but that's not a high quality pattern either. Not yet. So we'll see how this develops. But at the moment, this is a rather rough falling channel, which hasn't broken up yet. Okay, on CC. CC, we got a bear flag that's broken down, and that's got a target at a retest this low here in about the 85.50 area. So we'll see how that goes. I'm not seeing anything compelling at the moment, suggesting that isn't going to make target. Looking at cotton, potential double bottom still. Lumber, looks like a bear flag still. Wheat, we've got a potential level top here, and it's trying to break through the monthly pivot. If it gets through it, then this could break down into a retest of these lows in the 506.25 area. This is as a double top. This is a bit oversized, but I think it's just about still in the range where I'd be looking at it as a double top. Corn looks like looks like a double bottom here, but it could be an inverted head shoulders forming. We'll see. But at the moment, it's not scraped on itself off the lows, obviously. Soy, we've got a flag here which is broken up, and it's a pretty decent looking flag. So I'm going to give it some credit and lean towards it delivering. So we've seen a bit of a retracement here, but it's not much more than the 50 back. Much more than this downwards, and I'll be thinking another kind of pattern is forming. It might be expanding into another pattern, but normally when you've got a flag this nice, it's a pretty good bet it'll probably play out, but we'll see. Okay, looking at soybean oil, we have an IHS here. It broke up, almost immediately failed. I think this is a bad flag forming in all probability. And of course, we've still got this overall head and shoulder target down in the 42.9 area, which is looking more interesting now. Live cattle, broken up very slightly over wedge resistance. Quite a decent looking rising wedge here. I'm thinking we may well be topping out for a retracement. And lean hogs, I do have another trendline option where it's not overthrowing as much. I might use that tomorrow. I'll have a look. But at the moment, we're seeing a bit of negative divergence here. And I am wondering again whether this is going to deliver a retracement, just as I think we may well see that on live cattle. All right, let's have a look at the bigger picture charts on those and on coffee. Coffee, overall, from the high, this kind of looks like a bear flag forming. Sorry, bull flag forming. I think this might be setting up for a retest of the high, although we are very stretched by historical standards. We will see. Looking at sugar, we've got this big head and shoulders which is trying to break down, and so far it's doing a reasonably good job of breaking down. We'll see. I did have a bull flag option, but we're losing it. This could be a bullish underthrow, but at the moment we're losing it. Unless this stages some kind of a decent reversal, I'm skeptical. However, I would say that we've got a possible RSI 5 buy signal brewing here on the daily chart now. And maybe it can find its feet. I've been drawing, you can see I've been drawing options here. Not wild about the quality of any of them. So we'll have to see. Okay, looking at cocoa. Cocoa, by historical standards, is also pretty fully valued. Holding under the daily middle band, leaning towards the downside here, and I think that's kind of what we're seeing on the hourly chart too. Looking at wheat, we've got this big falling wedge which is breaking up and bottoming out. This could be a double bottom here. We'll see. It kind of looks like we might be forming an IHS here, but it'd be a low quality one because of this low here, which is below the right shoulder. If we were to form we've got a potential overall double bottom here. If we were to form a smaller pattern to go higher, then we might need to retest the low, and we didn't quite make it to the retest of this low on the last move. Looking at corn. Possible weak RSI 14 buy signal, RSI 5 buy signal is brewing. This does look like a flag there that's broken down. It's possible we could be forming the right shoulder of an IHS here, but I've got to say the lower it goes, the less likely that becomes. But we haven't got below 426.50 here. I'd quite like to see it not go below that because I think that would make this less credible as a possible IHS, although it would go some way to confirming that this is a bear flag which is breaking down with a retest of the low. We've got a possible RSI 5 buy signal brewing here on corn as well. Looking at soy. Soy, we haven't quite made it to the main declining resistance here, but we're getting pretty close. This overall looks most like a bear flag, but it's not particularly high quality. There's no obvious reversal pattern forming here. I am wondering about a retest of this low. All right, looking at cotton. Cotton, we've got a weak RSI 14 buy signal fixed on the weekly, and we've got an overall falling wedge from the 22 high. We haven't made it back to resistance yet, and if it continues moving at the rate it's been doing for the last couple of weeks, then we're not going to be seeing that anytime soon. Looking at lumber, this looks very much like a bear flag forming, although if I break that down into the daily chart, it's less confusing. This looks like a wedge which has broken down, but it's already retraced about 50%. We could find support here. It's retraced, just a bit over 50%, between 50 and 61.8. It's not reached a point where I'd really be looking for a retest of the low yet. We could see more upside. Keeping an open mind is making a decision here. We're holding the daily middle band for the moment. If we lose it badly and we head down and get below 537.54, I'd be thinking we're probably going to continue down. We shall see. All right, great. And that's the wrap. Everyone take care, and I will catch you guys again on Sunday. Take care.